The opportunity to be with you as well. We're very excited about the year ahead. We're currently in our fiscal 11, almost 2 months away from beginning fiscal 12, and this is a very exciting time for CAE Technologies. We are 1 year into executing our new growth strategy, where fundamentally we've repositioned our company into new growth markets, primarily leveraging what we see as a major inflection point in the information technology industry. The growth of virtualization has led to new opportunities for virtualization management across multiple platforms, and really this leads to the cloud opportunity that we see many of our customers talking to us about. So we've repositioned our company to take advantage of the core technologies that enable our customers around the world to take advantage of the cloud opportunity. So we've invested in virtualization management, our service assurance capabilities, service management platforms, security, and of course our core cloud platforms. So that's really what we'll continue to focus on. It's all really about execution and continue to execute very well against the strategies we've established. And then secondly, it's a great opportunity to be here in Mumbai, in India. We have a very large presence here in India, and we'll continue to grow that, as this is a very important part of our innovation capabilities, not only here in India in the domestic market, but around the world. Well, I think the most important thing, there's really three trends we're seeing, is they need to be more agile, which means they need to be more adaptable to the environment. And a lot of this was caused by this environment that we've just gone through over the last 2.5 years. Globally, we went through a very significant economic disruption. I think traditionally before that period, we saw information technology budgets growing year in and year out. And now, after this environment, budgets have been contained or declining, and the CIOs, the Chief Information Officers, have been asked by their companies to be more agile. Let's get more for less. How to drive costs down and how to get to market more quickly. So agility, lower costs, and getting to market more quickly. And I really think these are the underpinning forces that are driving this incredible opportunity for utility or cloud computing. I've been here only a short period of time, almost 7 months now. And what I saw was an opportunity for what we provide, which is we're one of the leaders in the world of providing IT management software for literally thousands of customers around the world. And traditionally, we've provided IT management software in the data center, in the traditional IT environment. But with the movement towards virtualization management and cloud computing and utility computing and what you call the commoditization of IT, it significantly increases the relevance of IT management software to a new level. Because things that customers used to spend a lot of time on were around application development, managing hardware and networking equipment, and all the labor that surrounded that. Really what's commoditizing is the delivery of software applications. So it's moving from spending their time on developing the application to delivering a service. And the opportunity for us is actually managing that service. And it's far more relevant from managing in the data center to managing across multiple modalities. Data center, hybrid clouds, public clouds. So really the opportunity for us is to take advantage of that significant increase in relevance. And you're right, I think IT will continue to commoditize, but it's more now about services. And fundamentally the role of the CIO, we believe, will change dramatically from managing hardware and software and applications to managing those services they need to deliver. And we have the potential to be the leading partner in the world to help them in that journey. We actually see the CIOs in large enterprises acting more like an IT supply chain manager. So rather than focusing on manufacturing operations where they're managing equipment and machines, they're managing supply of services. Secondly, we see an important trend occurring, and we're moving a part of our resources to take advantage in the mid-market. In small mid-sized businesses, so those businesses between $300 million and $2 billion in size, where we have not traditionally had a significant presence, we're allocating significant resources to that marketplace because we're seeing traditional IT departments become very small. So rather than hiring people to manage servers and networking equipment and having a department of 5 or 6 people, they're quickly becoming departments of 2 or 3. And really they're managing services and counting on infrastructure as a service to manage their hardware. They're looking at developing or deploying applications that were developed on platforms that are in the cloud. And of course, the growth in software as a service is happening very rapidly. And then what we're finding is the customers that are providing, or the service providers that are providing those services, are calling on us to be able to manage the hardware that they're managing and the application stack. So one of the fastest growing parts of our business is selling our capabilities and services to managed service providers and large communication service providers. Well, I'd never want to say never, but our focus continues to be on being a world leader and a technology leader in IT management software, and the services to support the delivery of that software and making sure our customers get the greatest value. As far as partnerships, we've really, I would say in the last 6 months, really honed our focus on a smaller number of very important partnerships, and I can tell you that over the course of the next few months and quarters, you'll continue to hear more about some of the partnerships we're forming. I'll tell you one that we've talked about, the VCE Alliance, which is the combination of VMware, Cisco, and EMC. They've selected our NIMSoft infrastructure monitoring solution to actually support vBlocks, and that's really an example, and I think a credit to the quality of products we offer and the value that we can actually create to some of these new technologies we see emerging. We have a group of dedicated resources to manage some of our largest strategic and technological alliances, so we do have dedicated resources, and we're shifting more resources to those teams. But probably more importantly, just a key point. One, we will continue to be a heterogeneous provider. So we're not putting all our eggs in one basket and betting on one technology platform. Our customers count on us to be able to support multiple platforms and multiple technologies, and we'll continue to do that. But with that said, our ability to understand what's going on from a technology standpoint, what trends we see emerging, fundamentally our customers are asking us to help provide them with platforms that they can invest in that leverage standards, and they're very concerned about being locked into any particular hardware stack or overall stack. And the core of our value proposition is to make sure that they don't get locked in, that they get maximum value and have flexibility to be able to work with and adopt multiple technologies.